I guess the first thing I want to do is welcome everyone to another learning session for the fall series all member webinars. So we started this series yesterday and we had great attendance, we had great engagement. So today I'm very excited to be presenting a CAAT retirement planning presentation. Yesterday we did an overview, a plan overview, and today is the retirement planning presentation. Now, before we start, let me properly introduce myself. My name is Steve Hyland. I'm the lead of pension education here at CAAT. I've been with CAAT for over, I would say, over 8.5 years now. Big part of my job is education and training. So I've worked in a variety of roles here at CAAT. But what I currently do is I help educate and inform members about their plan, about the plan formula, their plan design. I basically talk all things pension. So today I'm here to talk to you about all the key features of the CAAT plan, and I'm going to point you to some helpful resources as well, so that you can learn more about CAAT and how it fits into your overall retirement plans. So you may be in this session because, all right, so like I was saying, you may be joining the session because you're thinking about retiring, or maybe you just want some general information. So either way, my hope is that after today's webinar, you walk away and you've learned something. So let's jump right in. So this is our agenda or our outline for today. Always a good idea to let everyone know what we're going to be focusing on, what we're going to be talking about. But first, I'm going to briefly talk about what a DB or defined benefit pension plan is. I'm going to talk about the advantages and why it's relevant to you. Next, we're going to spend some time talking about your CAAT pension, what retirement means to you. So for example, how much pension you will receive, the options that you have. And then I'm going to switch gears and talk more about retirement planning, specifically that transition. So we'll walk through all the things that you'll want to start thinking about. For example, how much you need to retire, how to choose that right time. And we'll talk about the shift from work income to retirement income as well. All right. And once we get near the end, my favorite part of the presentation, I'm going to be doing a demo. And the demo is going to be of the online member portal. So it's called My Pension. Hopefully a lot of you have already signed up for it already. But yeah, we're going to be showing you how that all works, how you can sign up and things like that. And then lastly, I am going to touch on government pensions and personal savings. So before we get going, I'm just going to switch off my webcam just for connectivity issues, and it's going to help you better easily follow along with the slides that I'm showing you. All right. So what is our promise to you? Well, it's simple. The lifetime retirement income that you earn at CAAT is not only secure, but it is predictable. So you belong to what's called a DB pension plan. DB plan stands for defined benefit. And it really means that your pension at retirement is truly defined. The reason why is that it's because it's set by a formula. So we're going to show you the pension formulas today. And your pension is a reliable, consistent source of income that's going to be waiting for you when you retire. Okay, so that's why it's predictable. That's why it's secure. Now, while you're working, as most of you know, both you and your employer are contributing towards your future. And the amount that you get at retirement isn't affected by market ups or downs. You will know how much your pension will be before you retire. And that way you can feel confident about your retirement savings. So when you eventually make that decision to retire, remember you're getting money every single month deposited into your account. So it's like a paycheck in retirement, and it doesn't matter how long you live, your CAAT pension will be there for you. And that's even if you live well into your hundreds, we'll be happy to send you that pension check, so to speak, each and every month. So fun fact, our actual oldest member in the CAAT plan is 103 years old, and they've been collecting for quite some time. So when I say your pension is secure, well, how do we know? How do we know it is secure? Well, our strategy for resilience is to use funding reserves and conditional benefits to keep the plan sustainable for the long term. All right, so funding reserves, what they do is they simply provide a cushion against any unexpected changes, like, for example, the market's going down or demographic shift, things like that. Now, if you take a closer look at this graph, you can see that our funding reserves have been steadily growing for the past decade. So as of January 1 of this year, we now have an extra $4.4 billion in funding reserves. So yes, that means that we are in what's called a surplus position. So that is great. And the plan's funded status also increased from last year to 124% funded. Okay, and that's on a going concern basis. What that means to you is that we have set aside $1.24 for each dollar of pension that is promised to our membership. Now, with conditional benefits, these are extras like inflation protection, and they're based on plan funding. Okay, so when the plan is more than 100% funded, conditional benefits can be paid. Okay, all of our conditional benefits. So we've had conditional benefits for over 15 years now, and they have always been paid. So since this concept of conditional inflation was introduced back in 2007, we've always been able to grant it to our pensioners. So we've never missed a beat. And another fun fact, our internal and external asset liability studies show a very high likelihood of it being granted over a 20-year period. So that means that 20 years down the road, we should be able to continue to pay these conditional inflation protection increases to our pensioners. Okay, so that simply means that yes, you can be confident knowing that your pension plan remains strong, it remains resilient, and I would say it's probably one of the most sustainable pension plans in Canada. All right, so this next illustration simply shows how your pension has been growing throughout your working lifetime. So while you've been working, both you and your employer contribute to the pension. And then once you retire, you receive that, like I said earlier, that pension check every month for as long as you live. Now, not only that, but even in retirement, your pension will continue to grow, and that's because it's going to receive those conditional inflation protection increases, which I just mentioned on the previous slide. So that's why this line here that I'm showing you continues to increase even after retirement. Now, this graph also shows up to age 90. You can see that dotted line there because that's the average lifespan of our members from the age of 65. But as you can see, the graph actually continues. That line continues past age 90. And that's because no matter how long you live, your pension will continue to be paid. All right, so in this section here, I want to talk to you about your CAAT pension and all the benefits that you'll get as a retired member once you get there. So while you work, your pension, again, it's been growing because, again, you're contributing, your employer is contributing to it. So as most of you know, yes, your employer matches your contributions. So when you think about it, that's simply doubling your investment and growing that pension faster. In addition to that, you may have had the ability to make a service purchase to increase your pension at some point, and this is an option for you to get more out of your pension. So if you have any time where, for example, you had a break in employment, let's say an unpaid leave of absence, or maybe you were an employee before you enrolled in the plan, and this is something that you may want to look into before you retire. So it can help you with your overall retirement income. And it can help you to simplify because when you make a purchase, it simply means a bigger pension for you. So to find out more information about service purchases, please visit the CAAT Pension Plan website. Now, as you prepare for retirement, you're going to be happy to know that the features of the pension are these features right here. These are features Canadians want. These are features that Canadians need. And we're going to be covering all of these in the webinar today. But first, as I said earlier, you're eventually going to be receiving that secure lifetime pension, and that's when you make the decision to retire. The second thing I want to mention here is that you have flexibility. All right, so that means that you can retire when the time is right for you. So you have a lot of options. People ask me all the time, they say, Steve, when is the right time to retire? My answer is always the same. I tell them there is no right time to retire, but there is a right time to retire for you. So everyone's different. It's based on your own personal circumstances. Now, another great feature of the plan is something called inflation protection. I already mentioned this a few times already, but this simply means your pension is going to continue to grow in retirement to help you keep up with those rising costs of living. And again, we call it conditional inflation protection. Some people call it COLA. Some people call it post-retirement indexation. Some people call it cost of living, but it's all the same thing. Okay, and we're going to be elaborating on this a little bit further down the line. And the last thing here I want to mention on this particular slide is survivor pensions or survivor benefits. Okay, because your pension does include a surviving pension for your eligible spouse. Okay, so that means if you're married and you predecease your spouse, then there will be a benefit for your spouse, and that's at no extra cost to you. So that's why we call it, or you may have heard the term or phrase, no cost survivor pension. Okay, there is no cost to you. Now, there are two plan designs within the CAAT plan, but rest assured, both plans are defined benefit pension plan designs. And whether you're in DBprime or DBplus, it's one pension fund with the exact same joint governance model. Now, your pension is calculated based on the plan design that you're in. So whether it's DBprime or DBplus, and both were designed to adapt to different workplace arrangements. Both of them give you that lifetime pension, and they also provide other valuable features. As a reminder, DBprime, this is our original plan design, mainly for those full-time employees working within the college system. Okay, DBplus, this was launched a few years back in 2019 and is mainly for other than regular full-time members who work in the colleges, and it's also for other non-college affiliated employers. Okay, but let's get into the nuts and bolts of each of the formulas for these plan designs. So I want to talk about how members earn or accrue their pension. Okay, I'm going to do this at a high level, but in DBprime, your pension is calculated using this formula that I'm showing you here. Now, it may look a little scary. I promise you it's not that bad, but I'll do my best to summarize it. So the two things that you may be interested in here, or the two key components of the formula for you, are earnings and pensionable service. So these are the two main factors that drive your pension. Now, there's also something written in the top left-hand corner of the screen, highest average earnings. Members call this, or they refer to it as their HAPE, their HAPE. These are the average earnings for the 60 consecutive months that your earnings were the highest. So we use that to define earnings once we calculate your pension. Now, pensionable service, this is the total amount of time where you are contributing and earning a benefit under DBprime, which means the longer you work, the bigger your pension will be because you're increasing that pensionable service, right? And you can also increase that pensionable service with a purchase, which I mentioned before. Because we can see that pensionable service here, this is the main multiplier. So the higher your years of service, then the higher your annual pension. Now, another component to this formula, which is in here, is something called the bridge benefit. So for those that retire early, we do calculate an extra temporary piece of pension that's paid until age 65. So at 65, yes, it does drop off, but that's typically when you can start collecting your Canada pension plan. Okay, so this is the DBprime pension formula. Your DBplus pension, again, this is for those part-time members or those other than regular full-time members, or maybe you're a non-college affiliated employer. This formula looks a little bit different. It's a little more simple or straightforward, but what's relevant for DBplus members is your contributions plus your employer contributions. So the total contributions, and that's in the top line here. So you can see they're multiplied by what's called an annual pension factor, and our annual pension factor for DBplus is 8.5%. So a member would earn a guaranteed annual base pension equal to 8.5% of total member and employer contributions. Okay, simply put. So with DBplus, contributions are the main factor or multiplier or component, if you will. Plus, every year, the pension you earned up to the end of the prior year is increased based on the average industrial wage. So you can see a little acronym there in the second line of the formula, AIW. This is a StatsCan measure that's used to measure wage inflation in Canada. So each year that the plan is at least funding level 3 and you are a contributing member of the plan, these AIW increases will be applied. So AIW is one of those conditional benefits that I spoke about earlier, and this is why it's so great that we're 124% funded. Okay, so that's basically a high-level overview of the two plan formulas here at CAAT. So as I mentioned earlier, with the defined benefit pension that you've earned while working, you can choose a date that is right for you or that's tailored to your needs, but the specifics depend on the plan design that you participate in. Okay, but we do have a ton of resources and tools online to help you along the way. Okay, so you probably know there's already a lot of choice. But let's talk about the options for starting your pension and the benefits at the key milestone dates. So there is a window of up to 21 years during which you can choose to retire, and that depends on your plan design. But remember, you can retire when the time is right for you. So the typical retirement date that you probably heard of is age 65. Now, there are lots of other options in the CAAT plan, but you can retire anytime from age 55, or in some cases, age 50, right up until the end of the year in which you turn 71. Your retirement or your normal retirement date is the last day of the month that you turn 65. So this is the date that any member, no matter when they join CAAT or which plan design that they're in, can retire with what's called an unreduced pension. All right. Now, age 65, it's not mandatory to retire when you're 65. It's not even the average retirement age. Only about 25% of our members retire on or after 65. Most of them actually tend to retire earlier. Okay, but all members are eligible to retire at 55, but there are two ways that you may be able to retire as early as age 50. So the first is if you're a member of DBplus. So all members of DBplus are eligible to retire as early as age 50. So what I mean by that, that's the age when you can start receiving a monthly pension for life, if you wanted to. All right, and the second is if you're a member of DBprime and you're at least 50 years old and have 20 years of service in the plan. So this is called the 50-20 rule. Okay, if you meet that criteria, then yes, you can also start receiving that monthly pension for life as early as age 50. Now, if you retire early from DBprime, you'll also, again, be eligible to receive that bridge benefit. That's that ancillary benefit. And this is in addition to your lifetime pension. But if you do decide to retire early, though, remember your pension may be reduced. So the reduction is 3% per year. And remember, this reduction is simply there to reflect the fact that you're starting your pension early, and therefore you're going to be receiving it for a longer period of time. Okay, so in DBprime, it's 3% per year up until your earliest unreduced retirement date. And also, you're going to have that bridge benefit, so that would also be reduced by the same rate. Now with DBplus, that reduction is 3% per year up until age 65, but it can be anywhere between 3 and 5%, and that's based on the plan's funding policy. Okay, but yes, the reduction is currently 3%, as you can see here, but it can be anywhere between 3 and 5, and that's depending on the plan terms in effect at the time of your retirement. Okay, and when we talk about this reduction, I want to give an easy example here. So, if you're age 65, if age 65 is your unreduced retirement date, and let's say someone wants to retire at 60, then, well, they'd be 5 years away from 65 at 3% per year. 3% times the 5, they'd be looking at a 15% reduction to their pension at age 60. Okay. Quick note about the 3% reduction. It's actually the lowest reduction that we can offer as per our funding policy. And this reduction factor, it's sometimes referred to as a penalty. I personally hate that term. And the reason why, this is actually a subsidy. Because if we wanted to truly or actuarially or statistically reflect that true reduction that should be applied to a member's pension, to reflect the fact that it's going to be paid for a longer period of time, well, that reduction would be more in the range of a 6% per year reduction. Okay, and just for context, if we compare this reduction to, let's say, Canada Pension Plan, with CPP, that reduction is 7.2% per year. up until the age of 65. So under the exact same scenario that I just gave, if someone wanted to collect their CPP at 60, well, they'd be looking at a 36% decrease in their Canada Pension Plan. Okay, so CPP 7.2% per year, a big difference. And we're going to talk about Canada Pension Plan a little bit later on. All right, so early retirement in DBprime. So age 65, this is your earliest unreduced date for some, for most. But if you're in DBprime and you've been with CAAT for a while, then you may be eligible to retire with an unreduced pension earlier. Okay, so how do you know if you can do that? So age 65, like I said, typically a member's earliest unreduced date, but we have something called the 60-20 rule. It's right there on the screen. Okay, if you're age 60 and you have 20 years of pensionable service, then you have earned an early unreduced pension. So that means no reduction in your pension. 60-20 rule. The second criteria here is the 85 factor. Okay, so if your age plus your pensionable service equals 85 points or more, again, you've earned that early unreduced pension. Okay, the date at which you reach either of these criteria, either or, whichever comes first, this is called your earliest unreduced date. Sometimes members refer to this as their magic number date. I can see why, because that's the time where they can go on an unreduced basis. All right. Even if you don't meet either of these criteria, you can still retire before the age of 65. Just know that your pension is going to be reduced. Okay. And again, just to kind of reemphasize that bridge benefit for those in DBprime, this additional pension is also based on the formula. It's paid to you from your early retirement date, no matter when it is, up until age 65, and then it stops. Okay, and again, this is in addition to your lifetime pension. You can see an estimate of your DBprime bridge on both the DBprime estimator on the website. You can also see it on the portal as well. And you can even see it on your annual statement. Okay, but there is no bridge benefit if you're a member of DBplus. So you can continue to work and contribute to the plan after age 65 if you want to, right up until age 71. So once you reach age 71, this is where you're required to stop contributing to the plan and start collecting your pension. So this is based on the terms of the Income Tax Act. But if you want more information on when you're able to retire and start collecting your pension, again, My Pension, the online member portal, your annual statement. Okay, you can also use our pension estimators on our website to get an estimate of what your pension will look like or what it will be at specific dates, maybe your milestone dates. You can check that out as well. Okay, so hopefully you can see there's a lot of flexibility in choosing your retirement date in the CAAT plan. Now, your annual statement is probably the #1 tool that members should be using. This is at least where you want to start. You receive one of these every single year, and it's basically like a snapshot of what you've earned since you've been enrolled in the plan. Okay, it's going to show you your earned pension, your contributions you put in, and some personal information about you. So like, for example, your enrollment date, your date of birth, your beneficiary, et cetera, et cetera. Okay, and the statement always looks at the year previous. Okay, so if you're still working, your pension would already have grown by the time you're reading it. Okay, the legislative deadline every single year is June 30th, so you should have it by that deadline. You can now access all of your pension information online through the member portal. So this is a great tool. It's a popular tool. Our estimators used to be the most popular tools on the website. Now it's slowly shifting to the online member portal because you can do a lot of things in here. There's a lot of functionality in this portal. Okay, so you want to be sure, first of all, that you've activated your account. If you have, the screenshot will look very familiar to you. And I want to do a demo of the My Pension. I'm going to show you the key features of the portal. Okay, so if you take a look at your screen, you should see the My Pension account. So I want to show you how to get there and navigate to this for those of you that have access to My Pension. So here's the CAAT Pension Plan homepage. All you need to do at any of these tabs across the top, if you want to access My Pension, you can go to this login button here. So even if you go to members, that login feature, any tab, it's always going to be in the top right-hand corner to log in. Okay, so once you click login, you scroll down, and here's where you can select the option that's right for you. It asks you directly, are you a member? And this is how you log into My Pension. Okay, so it's available directly from the website. And this is simply like any other account that you have. You need to create or need to use an email address to create an account, create a password. So if you don't have an existing account, just go to where it says sign up now. And then all you'll need here is your member ID number. You'll need things like your date of birth, the last 3 digits of your SIN to create an account. But if you have an account, you put in your password, remember, click the terms of use, and then click login. So once you do that, it's going to look like this. This is the My Pension, your personal pension portal. Okay, so that's what's key here. This is personalized for you. Okay, but this is what the dashboard looks like. And the first thing I want to point out here with My Pension is there are some preferences, some communication preferences. This is very, very important, okay, that you set them up the way you want to set them up. So it's always a good idea to have a secondary email address. Reason why is because most people put in their employer email address, and then when they retire, they aren't able to access My Pension. So if you put a secondary one here, like a Gmail, a Yahoo, you can still go in there after you retire. Then we have preferred method of communication. You can choose mail or online. If you choose mail, you'll get a paper copy of your statement, but it'll always be available online on the portal. Anytime you change something up here, you can scroll down and click save, and that's how you change your preferences. Some members, they change and they forgot to do that, and that's why the change didn't go through. Okay, so we have here subscriptions to newsletters, subscriptions to announcements. You can toggle these on or off, right? So that's my preferences. Now, if we go back to the dashboard, once you log in, this is all the information about you. So it's going to have your ID, your plan design, your jurisdiction of employment. If you keep scrolling down, you can access the pension estimator directly, estimate your pension in the portal. But here, this is going to be like the headline information. So it tells you, I call it the headline information. So this is your annual pension earned as of a specific date. So it'll probably say 2021. It'll tell you your normal retirement date, and it'll also tell you your other milestone dates if they're applicable. If you keep scrolling down, you'll see here's how you can access the latest member newsletter, any upcoming webinars, and things like that. Okay, so I'm going to show you the pension estimator, but before I do, there's a couple of things I want to show you. On the left-hand side of the screen here, these are little tabs. So the first thing is member information. This is something that members love about the portal, is that you can go in here, and we have accordion folders that you can open up and close, and you can change information in here. But this is all information about you, your employment, your plan history. So if you click on plan history, it will tell you, your contributions for the previous years, your total earnings for the previous years, your service, and will also tell you your pension adjustment as well. So this is a great reference if you want any historical data on you. All right, to close it, you simply click the minus. Here's your employment and plan information. And then we have purchase history. If you've done a purchase, it will be here. If you want to go directly to the website, we had a lot of questions on purchases. You can go here, increasing your pension, and there's lots of information there. There are videos, pamphlets, and things like that. Contact information, spousal information, and beneficiary information. I won't go into there right now. One thing I do want to show everyone is the message center. This is how you can securely communicate directly with the CAAT plan. So if you click send a message, you can send us an email directly. Okay, so we do recommend and encourage all of our members to do it through the portal if you have access. So it automatically puts in the email, you put the subject, you put your message, and then here's where you can attach any documents. Click send a message, and that's how you can securely communicate to us. All right, now the last thing I want to show you is how to estimate your pension in My Pension. Terms of use, check the box, click start. So the great thing, or one of the best things about the online member portal, is that you don't have to go to the website to run an estimate now. You can simply do it through My Pension. Okay, there's something called a quick pension estimate. As soon as you log in, because this is personalized to you, it's going to automatically populate your information in here. You can change it if you want to, but if you keep scrolling down, it automatically tells you your estimated pension at your milestone date. So it's going to have your normal retirement date, your earliest pension date, your early unreduced pension, and your early reduced. It'll outline your annual pension and your bridge, okay? And again, your normal retirement pension. If you keep scrolling down, you can get information on each of those by clicking on the accordion folder. If you keep scrolling down, you can customize your estimate. So this is the great feature where you can change your information. Maybe you don't want your milestone dates. Maybe you have specific dates. Maybe you want to consider a purchase. You're factoring in a purchase, and you can put that in here, and it will automatically calculate. Or if you want, you can choose the age that you want to retire or the specific date. So let's say you know that I want to retire when I'm 63. Change that, click Get a Custom Estimate, wait a few seconds, and then it's going to do that calculation for you. So if you keep scrolling down, there's your custom estimate at age 63, annual and bridge. You want the detailed explanation? Here it is. You want to print them off? You can print them off, as many as you want. And this is where you can request what I call an official estimate from the CAAT plan. So for those situations that we had in the questions box talking about their pay increases that are very specific to where you work, you can request an official one through us. And as long as you provide us with all that information, we can run that for you. You just need to hit this big blue button. You are allowed to request an official estimate 3 times per year if you're within 5 years of retirement. So that is the online member portal. And in addition to that, yes, you can still go to the website and use our estimator tools there as well. If you don't know what plan design that you're in, check your annual statement. It's going to tell you. We do have some members who aren't quite sure, but it's going to be DBprime or DBplus. And remember, both designs were to adapt to different style workplaces. So there are different estimator tools for each of the plan designs. So quick reminder, if you're in the colleges and you're full-time, you're in DBprime. If you work in the colleges and you're part-time or contract, you're in DBplus. If your employer joined the CAAT plan anytime after 2019, then you're most likely in DBplus, and that's whether you're part-time or full-time. Okay, so I want to talk now about the transition from work to retirement, and we're in the home stretch here. We've got about 6 minutes left, and I still want to get to your questions, so I apologize in advance if we do go over, but it might seem like I'm zipping through the information. So again, apologies. Now, the transition from work to retirement. Okay, so we're going to be talking about your income in retirement, estate planning, and government pensions. So we do the work of building that strong foundation so that you can live the retirement that you want. So since the topic of today's session is retirement planning, it's probably worth spending a bit of time thinking about your lifestyle. Okay, so for example, do you plan on traveling the world in retirement, maybe taking a few cruises, every few months, or maybe you plan on staying closer to home, not doing much, you're more of a homebody. So it depends on you. So if the first one sounds more like you, then you may need more money to live on in retirement, right? So as you're thinking about this, you'll be wondering how much of your current income you need to replace. So here we're talking about replacement ratios. So it could be anywhere of up to 100% of your income. But the most credible experts suggest that a good replacement ratio is somewhere between 50 and 70%, depending on the lifestyle that you're looking to have. So what does that mean? Well, 70% of what you're making right now to help maintain the same standard of living in retirement, okay, approximately. But obviously you'll need more income than you have expenses, right? So it may seem obvious that you may need to replace 100% of your income in some cases, and that's because you're living on that income now. But let's talk about why you may not need 100%. Okay, and that means talking about, what your expenses in retirement will look like. So first, consider your current pay and the deduction. So what's coming off that pay stub? As you can see here, you pay income tax, you contribute to CPP, EI, and of course your CAAT plan contributions. Plus there could be other deductions for insurance, other things, dues, for example. Once all those amounts are deducted, then you'll get to see your net or take-home pay. Now let's compare that to income in retirement. So yes, obviously you still have income, though now it's coming from CAAT and any other retirement plans like your government pension, CPP, OAS, and you still have income tax because your pension is taxable. Now what you don't see here are things like CPP, EI contributions, CAAT contributions, which have a large impact on your take-home pay. These are all gone now in retirement. Okay. We had a question about insurance or health insurance premiums, and currently your employer could provide you the insurance at a lower cost. But in retirement, remember, that's going to be 100% your cost. Okay, but you can reach out to your HR department for more information on that if you're nearing retirement. We had this question earlier. Yes, your pension is taxable. It's deducted at the source. CIBC Mellon, that is our trustee, which deposits your pension for us. They're going to deduct the income tax before they deposit your pension into your bank account. Currently, right now, you get a T4 from your employer. When you retire, you get a T4A from the CAAT plan. All right, so in retirement, you're going to have your employer pension, your CAAT pension, you're going to have government, you're going to have savings. So let's talk more about these things. Now, as you're planning for your retirement, no doubt you're fine-tuning your income by working out what you need to know about your government pensions. And in that transition to retirement income, will that income stay the same forever? So obviously not, right? Prices go up. So next we're going to talk about inflation protection. So I want everyone to think back as far as maybe 1996. What was the average gas price back then? Well, I can tell you it was less than 56 cents a liter. The average new car in 1996, $13,000. The average home, $198,000. You compare that to today, hopefully you're noticing a trend that, prices are going up, obviously. But the good news is so does your pension right along with everything else. So that's what we mean when we say inflation protection. Okay, your CAAT pension will keep up with inflation. And these payments are cumulative. Okay, that means it continues to grow even after you start collecting it. Okay, so we pay inflation at 75% of the consumer price index. And this is a model. What I'm showing you here, this is a model of what your pension would look like with and without inflation. The horizontal line across the bottom is the pension without. And then we have the line that is increasing, that's with inflation protection. So the pension continues to increase, which helps you as a retired member keep up with those rising costs. Okay, it helps to protect your purchasing power in retirement. Also, once an inflation increase is granted, remember it can never be taken away. It becomes a permanent part of your pension. All right, so when you're planning for your retirement, it's important to think about your other sources, personal savings, Canada Pension Plan, old age security. So let's take a look at these in a bit more detail. So the first thing I want to mention about CPP, this is a national pension plan that you've been paying into throughout your career. It provides you with a lifetime pension based on your total earnings history. OAS, not a pension plan, but rather it's a payment from government revenue. It's designed as a top-up, but it is based on residency requirements. So how long have you been living in Canada? So it is not based on your earnings while working. So with CPP, it has flexibility in terms of start dates. Just like your CAAT plan, you can start to collect your CPP payments at age 65, or you can start it as early as age 60. And if you do that, remember we talked about the reduction at 7.2% per year, okay? That reduction, if you retire early, or if you take your pension early from CPP, it remains. So it's not going to go back up at 65. I think we had that question earlier as well. You could also delay the start of your CPP to later than 65 if you want to, as far as age 70. We talked a little bit about the post-retirement benefit, the PRB benefit. But again, for more information on that, go to servicecanada.gc.ca. If you want an estimate of your Canada Pension Plan, you can obtain one by going to the website. They do it online now. They give you a PIN, and they'll provide you with estimates. With old age security, you can start collecting it at age 65. So there's no option to start this earlier. Okay, if you want to delay the start of old age security, you can. You can start at any time up to age 70. And if you do, that OAS amount is increased by 7.2% per year from age 65. But remember, you're going to be missing out on those years of OAS payments. Now, remember, I said OAS, this is based on residency requirements. Okay, so if you have to be living in Canada for at least 10 years after the age of 18 to be eligible for OAS, that's the minimum requirement. You'd be eligible for the maximum OAS pension, which is about $7,700 per year. That was at the beginning of the year this year. But essentially, you had to have been living in Canada for at least 40 years after the age of 18. If you have, you'd be eligible for the maximum. Now, one thing I always mention with OAS is the threshold, right? There's something called a clawback. It starts at 15%. So if you earn more than $81,000 per year, the amount by which your income exceeds that level, it's going to be taxed at a rate of 15%. And that's until the entire OAS benefit is clawed back. So in other words, that clawback can increase beyond 15%. If your net income reaches about $133,000 per year, then you won't be eligible to receive an OAS benefit at all. Okay, so keep in mind there may be thresholds with OAS, and they look at all of your income, everything you're pulling in retirement. So not just your CAAT pension. Okay, but you could or you may want to think about deferring your OAS. You may want to think about income splitting. This can help you avoid the clawback. This is an option. If you have a lower earning spouse, you can split your income with him or her, and this could help you get under those thresholds. But again, for more information on this, we suggest you speak to a financial advisor. So here it is. I mentioned Canada.ca, which used to be servicecanada.ca. You can search here for CPP and OAS benefits. Lots of good information on this website. You do have to do this yourself. So your employer will not do this for you. You're responsible for applying to government pensions. With CPP, I've heard some horror stories. It's always a good idea to apply to it at least 6 months in advance before you want your first payment to start. OAS now has automatic enrollment. So if you're automatically enrolled, Service Canada will just send you a notification letter the month after you turn 64. All right, so just to touch on this very briefly, you may also have personal savings that are part of your total retirement income. So maybe you have RSPs, maybe you have TFSAs. It's important that you don't forget about these personal savings when you're planning for your retirement. And your pension at CAAT also includes those survivor benefits that we already spoke about. So we have pre and post-retirement benefits. So there is a difference, but today we're mainly going to focus on the post-retirement survivor benefit. Okay, so this is, if something happens to you after you retire. So if you do have an eligible spouse, then that person is entitled to that lifetime pension. Okay, and that's, again, it's whether you pass away before or even after, but let's focus on the after. So someone asked this question earlier, so I apologize, I'm going to be repeating it for those that didn't hear, but the benefit itself, if you were to pass away in retirement, your spouse would receive a pension equal to 60% of your pension for the rest of their life. The 60% is based on the last pension payment, so past inflation increases, they do apply to the calculation of your spouse's pension. Not only that, but the survivor benefit also receives the same inflation protection in the exact same manner that the member was receiving it. So the survivor pension continues to grow for your spouse. If you were to pass away while receiving a DBprime bridge benefit, the 60% pension does not include the bridge. What if you do not have a spouse? Well, we have two other survivor benefit provisions in the plan to account for this. The first is called the post-retirement spousal benefit, meaning if you do not have a spouse at retirement, but let's say after retirement you get married, well, that new person can be your eligible spouse for the survivor benefit, and that's at no additional cost to you. This is a very unique feature. You won't find it in too many other pension plans. Similarly, if you're married at retirement, but let's say your spouse were to pass away, and if you were to start a new relationship in retirement, your new spouse would be eligible for the 60% pension as well. Okay, and that's provided they meet the definition of an eligible spouse at the date of your death. We also have a 60-month minimum guarantee. We call this the 5-year guarantee. This is a guarantee that no matter what, we guarantee that at least 60 months or at least 5 years of payments will be paid out. Okay, so that means it could be paid out to your designated beneficiary, whoever is there. So what this means is that if you were to pass away within the first 5 years of retirement and you do not have a spouse or any eligible children, the balance of 60 times your initial pension payments minus what you've already been paid is paid to your beneficiary. So that's called the 5-year guarantee. All right, I just want to launch a quick poll. We've covered a lot of information right now, but I'm just going to ask for your participation here. And if you look at the screen, I'm going to throw up this poll. I'm just asking you which of the following is true. So if you click the radio dial button, we greatly appreciate it. My retirement date is up to me. My pension continues to grow in retirement, or my spouse will receive a lifetime pension when I pass away, or D, all of the above. What do you guys think? I'm seeing the numbers move a little bit, so this is fantastic. Thank you for your participation. And I'm going to stop it now and share the results. So if you take a look at the screen, you guys are fantastic. You've gotten it pretty much all correct. Yes, it is all of the above. You're going to get all of these great benefits. Your retirement date is up to you. Bit of a trick question, but your pension continues to grow in retirement because of those inflation protection increases. And yes, your spouse will receive that lifetime pension if you were to pass away. So yes, D, all of the above in this particular poll. All right. So CAAT is ready when you are. So whether retirement is around the corner or whether it's, far away from now, you've already made a great step by attending the session today. So thank you for being here. But the first step in terms of your retirement planning, it's never too early to start planning. So what you want to do, the first thing is your first stop should be the website. Okay, you can get all kinds of things there. You may want to estimate your pension. We have the tools that you can do that. And you want to make sure your spousal and beneficiary information are up to date. Also, you want to consider making a purchase. We talked a little bit about that. This can help you get a larger pension, could help you retire sooner, and we won't charge you any fees for that. Now, once you know the date that you want to retire and start collecting your pension, you do want to contact your HR department. We said earlier, at least 3 months in advance. You'll complete what's called a pension application form. Once we receive that application form from your employer, we're going to prepare an option document for you. We'll mail it out to you. You'll also have some tax forms in there, things like that, things you have to fill out, a direct deposit form, things like that. This will tell us where we can send you your funds. And lastly, it's time to enjoy that retirement. So once you're retired, we will be reaching out to you. Once a year, we send you an annual statement. Yes, even in retirement, it's going to show you your pension paid and any increase as a result of the inflation protection. We are now on Facebook. So this is relatively new, but some of you may already be aware of this, but we are Facebook official. So scan the QR code on the screen and you can follow us to be the first in the know when it comes to your pension. And remember, you are not alone. Okay, CAAT is here to help. So you can reach us using any of the methods listed on the screen, but we do encourage you to message us directly through the portal, through My Pension, your email. So thanks again, everyone, and have a great day.